Fantastic. Welcome everyone back on the Financial Fox Smart Investing with Clem Chambers, our favorite British investors and CEO of Online Blockchain. Hi Clem, how are you?
I'm not too bad, thank you. In fact, I'm good. Spring has finally sprung. So you know, all the pollen is attacking me, but I'm enjoying the weather.
Okay, so I think the market is a little bit shaky, let's call it that way. Everybody
There's an old word for it. Back in the day, when I was little, they used to say the market was firm or it was soft.
Well, I think
the market is definitely soft. Definitely
exactly.
Soft.
Yeah, it's funny because last night I was doing a live streaming with a really nice girl on Instagram, and she's younger and she's already thinking about saving and investing. And we were doing this live streaming and I asked her this question. I mean, you are in your 30 and you are so worried about investing, where to put your money. You know, obviously there is a lot down to crypto because that's where the new generation want to be, less about stock and shares. But I was amazed by, you know, this attitude that probably, you know, even my generation, it was a bit different. You know, you just were more worried about working than actually investing.
Your generation?
Well, I mean, I don't know. I always feel old, even though I'm 36. But
well, you know, my generation, back in my day. Well, I mean, I suppose, you know, there are people that are interested in money and people that are interested in other things. And you know, if you're interested in money, like I am, you know, you get stuck into it, don't you? I mean, it's quite a good sport. And it has lots of payoffs, and of course the world is also full of misers. So you know, it's a spectrum. It's from the playboys at one end to the misers at the other. You won't find many playboy misers, but if you're interested in money and you realize, you know, just how important it is, then you know you do start early. I mean, it's the kid with the piggy bank, and you know, putting the pennies or whatever it is these days, pound coins, into a piggy bank. I mean, the ants and the grasshoppers aren't there, and the grasshoppers don't save, and the ants, you know, stack it. And we know how that tends to work out. I mean, if you start stacking your money, you end up with quite a lot of it. And if you don't stack up your money, you end up impoverished and, you know, with no money at all. And you end up old and very scared for your future.
So if we're
to be scared at the beginning rather than at the end.
So if you are talking a bit about personal finance, I mean, it would be wiser for people to just don't leave any money in their bank account, just what they need, you know, to pay their expensive, meet the cost and stuff.
Well, I mean, I think the best thing to think about is in personal finance is good habits rather than anything else. I like to think I've always had good habits, but I mean, I spend like a sailor, but I also save like a Scrooge. So, you know, I've got a balance in there. And one of the best ways to save is to do it in small amounts. If you just, you know, if you save what you can or what you think you can, even if it's £10 a month, if you take that money out of your bank account and put it into another account, somewhere where it's piling up on its own quietly, that's a good way to save, because people tend to aim their personal finances at thresholds. So they go, well, I've got a bank account. I've got a £1,000 overdraft. Oh, it's now £600. Oh, I better stop spending. I better start saving. And that's how they go forward. So the whole life, they got a £600 overdraft, which is not going to get them anywhere. Now, if they've taken £50 out every month and put it into an ISA, or any old place really, bought a silver coin, at the end of 20 years, they'll have a pile of silver coins and a £600 overdraft, or a fat ISA and a £600 overdraft, because they're navigating by that £600 overdraft. And the only way to stop that being the only financial reality in your life is to put some aside somewhere else, away from that automatic response. So most people do that by buying a house and getting a mortgage. So they stack up their wealth by saving, because their mortgage drains all their money away. And It's a very, very good long-term way of saving money. And the trouble with that being, when you get old, you have to sell your nice house and you have to move into something smaller to use that savings account, or get a reverse mortgage, which is totally toxic, or use your house as an ATM by remortgaging, which is totally toxic. But, again, things like remortgaging is the sort of totally toxic habit that people get into. And they start out with a house that if they had, bought that extra, holiday, or bought that extra large car, or built that really expensive kitchen that they didn't need, or whatever it was that they got the second mortgage for. If they hadn't got into the habit of going to the bank, oh, can I have 50 grand, please? They wouldn't have got into that cycle, which ended up meaning that they were old and had no money. So it's your financial cycles that I believe is the most important thing. And to get a nice financial cycle going is a way to actually build up your capital and your resources, because it kind of dictates how the money in your life flows, and takes it away from the monkey that wants to go out to dinner tonight, or the monkey that wants to buy a nicer car, or the monkey that wants to go on a nicer holiday than they can afford, and saves you because you've, what I call, sumped it. You've put it out of harm's reach.
Yeah, but you mentioned about buying a house. Obviously, after we have seen pricing going so high, some people they are not able to put down a mortgage. So they maybe decide, okay, because I can't do that, then maybe
it's just a matter of time. Buying a house is just a matter of time. If you can't afford to buy a house, when you leave school, you can't afford to buy a house. No one ever could, right? Or maybe if they lived in Preston in 1932, they could buy a house when they left school. But most people can't afford to buy a house until they're in their 30s. Yeah, and people that buy the house before that, they've got a handout from parents that have got a block of capital who give it to them. But any normal person that doesn't have the bank of mum and dad, when they leave school, they don't make much money, or university, don't make much money. They don't make much money for several years until suddenly they've got a bit of money. If you look, people have a financial life cycle. They start out in their 20s, they paid okay, they live in cheap property or with their parents, and they go out and they party. And then they get married, but their salaries go up, and they get poor because they got kids, and they had 2 incomes, now they've got 1. Yeah. At which point, maybe a parent dies and leaves them enough to get on the housing check, right? When they're at 40, they start to make the decent money. Now, if they haven't decided that that they're not going to work very hard, or if they've got 2 incomes, they're probably coining it really, really, really well. If they've managed to stay employed, they're in a good shape when they're in their 40s. Now, when they get to 50s, if they're still employed, which a lot of people won't be because they weren't very good at it, or they decided they were going to jack it in, or they decided that they got an inheritance and therefore they could stop working, they make the big money and they stack it, and so on and so forth. One can sketch out the financial life and cycle of people quite easily. And where are you? If you want to buy a house, you either get a lump sum from the bank of mum and dad, or you play football for a football team, or you are talented, or suddenly when you get to 30, your income is enough for you to be able to do those things, and you save for 3 or 4 years to get there, etc., etc., etc. In the 80s, nobody had a house before they were 30s unless they've got a bank of mum and dad. And it's still the same today. It's really no different. And when you go and buy a house and you've got a fat mortgage, you haven't got any disposable income because you probably borrowed more than you could afford. And therefore, you haven't got any, you have to wait 6 months to buy a bed like I did when I was 30, whatever. It hasn't really changed. Now, people have high expectations of the world to deliver lots of physical things to people out of the blue, because most people have been brought up in a very privileged life. But the privilege stops when you take responsibility for your own life, generally. And life is not so easy.
I think that's a very important point. One of the things that I see talking to young generation is this kind of urgency to get rich quick because everything happened with crypto. So they foam into when it's at the top, and some of them they make
nothing new there. And I'm always suspicious of talking about a younger generation, because I used to be a younger generation a few years ago, and it was the same. It's always the same. It's the same old story, the same old story. And it doesn't matter whether young or old, people invest with their emotions, not with their brains, and gets them in trouble, because the world is full of predators, and those predators wait for bunny rabbits to come hopping by full of excitement to gobble them up. I mean, in South America, the small investor are called sardines, and the big investors are called sharks. And of course, in crypto, they're called whales. Oh, he's a whale, and all that nonsense. And the whales always make things happen. But no, they don't. People generally are their own worst enemy when it comes to finances, because they're driven by their emotions.
Yeah.
And emotions are designed to help you survive running through the jungle in a loincloth and a spear. They're not designed to help you succeed in the modern financial world of mathematics and logic.
Yeah, I think it's this concept of urgency that you need to do something right now. You need to buy something now, otherwise you're going to miss the opportunity. That is kind of dragging people to make mistakes.
Well, but investing is a learning curve.
Yeah,
you've got to understand that you just can't make money invest in a straight line. You're going to make money, going to lose money. I mean, I bought some what was it? Oh yeah, Anglo American this morning after it came out with some pretty poor statements. And I bought at a price. It's gone down 2 or 3% since then. But I don't care, because I'm expecting it to be 10 or 15 or 20% higher in 6 or 9 months. But you've got to be prepared to say, I'm probably not buying at the right price. Why would I buy something if I thought it might go down? You'll hear that all the time. And it makes perfect sense for about 6 seconds. But if you did a little bit of work and realize that you never buy the bottom and you never sell at the top, so you're always going to, I think 9 times out of 10, any investment you buy, you'll lose money on it at some point, right? Well, so why would I buy it? Well, because 9 times out of 10, if you pick good shares, you'll make money in the long run. And, most people haven't done the study, haven't done the work, haven't had the education, haven't had the opportunity to be able to expose to proper ways of looking after their money. They don't teach money at school. I did a little business venture when I was about 19 that enabled school kids to buy computer games and then sell them on to their mates at a nice fat profit. Everybody went mad. They said it was evil. Money, teaching kids about money, how to make money at school, it's evil, it's evil, money's evil, evil. This was back in the early 80s when I was barely a child as well. But everybody considered children handling money was evil, because after all, money is the root of all, as we all know. And money's bad. Well, you get to be an adult, you have no idea how to handle it, do you? And therefore you're very vulnerable to losing what little you have.
So Clem, going back, talking about the market and perhaps some ideas for people to invest. Are you going to are you still a gold bull?
Oh yeah, I'm a money bear. I don't,
I like that. I like that. I'm a debit card bear.
Well, what is the best thing you could possibly do right now to make money? Well, probably borrow as much money as you can and buy a Picasso. Yeah.
Okay.
Now,
okay.
That's what the rich people do. Yeah. Because, this confetti stuff, I mean, it's going only one way. Everybody knows that. It's going down. You see, the thing that nobody's twigged out there in the media, and I keep saying to people, and I kind of get, I go, don't you understand what's going on? Is the COVID lockdowns made every country a fairly large amount poorer, because they didn't have manufacture. People weren't getting out and about doing business. Nobody was on the trains. Nobody was down the Pret a Manger buying sandwiches. Nobody was going out to the pubs. GDP was hammered by that. Or you could look at it, the activity of the world and the countries that we all lived in were damaged, severely damaged, were made poorer. Okay, well, that's what we're experiencing now. Oh, we haven't got buying power. We're feeling the pinch. Well, that's because everybody's been locked down for 2 years. Everybody's been not flying in airplanes. Everybody's not been going down the pub. Everybody's not been going out to work. Everybody's not been driving their car. No one's been making new cars, etc., etc., etc. If you don't have economic activity, you're going to be poorer, right? And that's what's happened. We had 2 years worth of pandemic actions poorer. Well, they printed money to paper that over. So people got the same amount of money. Oh, I got the same amount of money. Oh, nothing's happened to me. Well, it has, because the value of that money's gone down. Because I had to print money to paper over everything. So the value of your money's gone down. So you are poorer. Your salaries remain the same. Lucky you've got a job, for most people. But the value of that pay has gone down because the quantity of money has gone up. Yeah. So the pinch that people are feeling, it's not because of inflation. It's because the whole country got poorer, and that is coming out in people's buying power. Yeah, people got poorer. They increased the amount of money so that the amount of wealth was represented by more paper. Yeah, but the wealth had gone down. Paper remained the same level. Wealth had gone down. So now they go out with a paper and say, it doesn't go as far.
Yeah, but Clem, everybody's talking about the Fed raising interest rate of 5%. Do you think that can help to kind of rebalance the power of the fiat?
Well, I mean, okay, so you've got this reality that America, China, Europe, everybody got poorer. Okay, and the way that people have been made to feel as if they're just as rich is that asset values have gone up. Yeah, so the house has gone up 20%. Yay! But actually your money's worth 20% less. So you're standing still, but you feel richer. But when you come to take your salary and spend it, it's only going 80% of the distance. Now, what happens if you then crush the value of assets? Well, actually your inflation goes away straight away because you just go around and you burn everyone's house down. Yeah, well, that will certainly sort out inflation. However, then you're going to be back where you started from. You're going to be back where you would have been at the end of the COVID crisis if you hadn't printed the money. So you're not going to do that, are you? You're not going to say, well, we've got two choices. We've got inflation for the next 5 years. And you're going to moan and groan about it. You're going to, oh, bleed, oh, dear, oh, I don't understand my money. Oh. Or we can come in and we can burn your house down. And we can kick you out of work, and we can crush the company you work for. And, unemployment is going to go through the roof, and people aren't going to be able to, your national health is going to collapse, and it's going to be economic wasteland, going to make Margaret Thatcher's period look like a party. No one's going to do that. They're just going to carry on going, oh, yeah, inflation, it's our fault. Oh, no, it's over there. Oh, it wasn't us. We didn't do it. Yeah. And the whole economy will grow because there's lots of money sloshing about, will be rebalanced because all the debts that are denominated in this devaluing currency will be eaten away. And anybody with a mortgage who might be going, oh, my salary's not going so far down. Oh, my mortgage has gone up. Will actually be having their mortgage destroyed by inflation. Because remember, if you've got 7% inflation, you've got a mortgage, your mortgage is going down 7% every year. Yeah. Your house isn't going up in value. Your mortgage is going down in value. Yeah. People have to understand inflation, rising prices, the actual value remains the same. So if you've got borrowings, you're winning every year. You're winning 7-8%, or what the real inflation rate might be, 10-12%.
Yeah, that's why people stack food and buy a lot of things because it's going to be cheaper today and tomorrow.
Well, it's why rich buy assets on borrowed money.
Yeah.
Because the value of their borrowed money goes down, the value of the asset goes up. And they can pay back that. They're being paid to own assets. Now, it's a tricky balance because if an economy goes off the rails and you borrow too much and your interest rate goes too high, you're going to default, and then they're going to take away your assets and kick you out. And that's going to be sad, which is why a lot of rich people often go bust when interest rates go high. As Trump said, I'm a kind of low interest rate guy. Yeah. But, for most people, that's not an option for them because they can't borrow cheaply or they can't borrow at all.
Yeah. Okay. So basically buy solid assets, and gold is definitely a candidate. How about silver, Clem? Do you own any shares in any silver producer at the moment?
I have Fresnillo, which is a silver mine. I have a few 100 kilos of the physical. But, precious metals are sluggish. Very, very sluggish. I mean, they will go up as much as money goes down, and they don't go in a straight line. It's It's not a fast horse.
They have got Parkinson's diseases.
I'm not so sure about that, but anyway, they have volatility, but they are silver is the fast horse amongst precious metals. So if you want to have a little bit of ping, it's silver. But you know, it's quite a difficult environment to invest, as you saw from Netflix last night. Which
exactly, I was going to bring that up because I was quite surprised. I mean, you know, the world has changed, and they model should be actually the one that is driving in the future, where actually we are seeing that they also have got issues.
Well, you've got to look at the value of these businesses. So it's not, oh, share price has fallen, blah, blah, oh, why is that? It's such a great company. It's how much was that company valued? Well, it's now $220. It was $800. So it's gone down 75%. I think, roughly speaking, you need to check the numbers yourself, though. Why? Well, because it was worth 400 billion. 400 billion? Well, I mean, there's only 400 million people in America. So if you take $1,000 per American per subscription, that's a big number. Why is a Netflix subscription worth $1,000? The old cable companies' subscriptions used to be worth $2,000.
Yeah.
So maybe it's not such a bad thing. But when you're talking about getting on for $500 billion for a TV channel that streams over the internet, yeah, so it's a big ask. You know, call it 400 billion. There's only 8,000, and there's only 8 billion people in the world. So 8 into 400 goes 50, doesn't it? So, you know, it's a lot of dollars per head of Homo sapiens on Earth. And a lot of these companies that are up there in the firmament, their valuations, when you start thinking of them in terms of what they do and what they're worth, it's extremely high. I mean, Apple, for every person on the planet, you can buy an Apple product in their market cap, etc., etc., etc. So the valuations are extremely high. I actually bought a fairly large amount of Netflix last night, but you know, I was playing the trading game, which can be fun, can be hair raising, and that's a different game entirely from investing.
Do you think that could happen also to other big tech company like Amazon or Apple you just mentioned?
Well, this is Nasdaq, right? This is Nasdaq, and what's happened with the Nasdaq and with American tech stocks in general is you're seeing a hollowing out of the market, and the hollowing out is coming from within the market itself. So the small caps were the first to get hammered, and then the medium caps got hollowed out, and now it's starting on the big caps. So it's the index itself is highly concentrated in the very large names. So it only takes a similar thing to happen to Apple, and the Nasdaq would drop like a rock. And I think I think the Nasdaq's going to get hollowed out, is being hollowed out, has been hollowed out, and now it's starting to get at those big companies that really make up a large proportion of the Nasdaq index. And if those shoes start to drop, you know, the Nasdaq could drop 25, 30, 40, 50%.
Yeah, okay, interesting. Now, I want to bring the conversation to a bit of crypto and steal some stock. So if we talk about...
Use your catchphrase, Stephanie.
Exactly. Let's talk a bit about crypto. Right. So there is a lot of things happening with NFT. You know, we are still like in the race. Who is going to get there to, you know, gain the bigger community? And I think we didn't discuss that last week, but Facebook, Meta announced they are going to be integrating NFT, but they are going to take quite a fat cut out of the creators. And that raised the question.
I'll be all over that. They can take a fat cut out of me all day of the year. I mean, what a lot.
Yeah, but what's the point, Clem, to kind of be in crypto if, you know, you are an NFT creator, and all the point is actually you have ownership and you can monetize on your assets to just give Facebook more over 47%.
No, you got that all wrong. You got that all wrong. You see, I learned this early on.
Okay.
If let me be Mark Zuckerberg for a minute. Okay. What have you got? You got a board yacht, have you? You've got an 8. Well, I've got an audience. Do you want my audience? Oh, I've got hundreds of millions of people who are my audience. I own them. But I paid billions for them, and I own them. And you want access to them? Well, good for you. Well, that's going to cost you, isn't it?
Yeah,
and
but
that's going to cost you a third, just a third,
yeah.
a third. You know, you go sell your book to a bookstore and lose 60%. Yeah, and so go be a writer and lose 60%. Go to go to a record company and lose 85% for your amazing creative stuff. Well, I've got the biggest audience in the world, and all I'm asking for is a third of the action. Go to a retailer and try to sell your products at a third discount. They'll laugh in your face.
So that will kind of keep the pricing power of those assets up. I mean, what I'm trying to say is that using these tactics, Meta is trying to keep the price higher of those assets, because otherwise, if you go,
they won't care. They won't care. They'll say, we got a platform, we've got an audience, do your stuff. And if you're any good, you'll do well. If you're not any good, you won't do well. And if we like you, we'll give you a push. And if we don't like you, we won't. In fact, we're probably shadow ban you. And you know, just like YouTube, just like all these other platforms, kiss my ring, and you know, because I own the audience. And you know, if you've got great talent, you do really, really well. If you're just a bunch of jokers like most people, you won't. And if you want to get in front of our audience, you can get on our platform and start to get in front of it. You better bring your own audience too. You better buy advertising as well. And you better do some clever stuff on all the other media to bring people to Facebook to look at your whatever it is. We don't care what it is as long as it's within the law.
Okay, fine. So how about Coinbase has got their NFT marketplace in beta, and soon is going to be a release. And that is a way where you can people can comment on your NFT. So it's more like an Instagram style NFT marketplace. Perhaps that might be a better platform, that because there are more crypto people that actually are trading NFT, they understand crypto more than perhaps maybe Facebook. I don't know.
I think NFTs very quickly became a gold rush, where everybody sold their nice farms and bought a wagon and some horses and headed west to the gold fields on the hope that they were going to land in a field full of gold. And hardly any of them will. Yeah, because most of them are complete junk. And you know, that's it. Good NFTs, great NFTs. Well, I mean, there's a gold rush has gone on and is going on, but as we saw with the guy that bought, who did he buy? Yeah, Mr. Twitter's NFT for 2.9 million and got offered $3,000 for it 6 weeks later.
Exactly.
You know, there is an element of tulip bulb syndrome with NFTs, and I think the bottom has dropped out of that already. It's gone. Now, people who produce NFTs that have a purpose, have a usage, do something interesting, which they will have value. And NFTs that are attached to valuable assets will also have a great deal of value, because that is also one of their purposes.
Okay. Well, I was going to say, you know, everybody is asking what's next in crypto, and perhaps one idea is digital identity attached to NFT or avatars. Is something that I've got quite a strong conviction, but I wanted you to, you know, you always predict what is going to be.
Digital identity is going to be a big thing, and it's going to be a big thing for many, many reasons. But the one big reason is that modern life is starting to require it. And, you know, your identity is starting to become really, really the key to a lot of things. I mean, you can't bank without it. You can't, you know, everywhere I go, people are asking me to identify myself and what my mother's maiden name is, and, you know, etc. So to have a system where you can just go, you know, here's my identity, and also be able to control how much of that you give out, and also be able to push back against it as well. I think that's very important. I mean, I had a very not very happy discussion with a lawyer who I was working with, some legal company, and they said, "Oh, you know, you need to KYC AML with us." I said, "Well, no, I don't. You're a bloody lawyer."
Yeah.
And they got a bit upset by, "Oh, we've got an obligation to know who you are." So, well, you know who I am. You know, so there's a lot of this AML KYC which is impinging on normal life. And the ability to swipe it away with a card or with a digital identity, I think will be quite useful. And because there's going to get more and more of it, and the best way to push back is to control your own identity. Otherwise, you just get nickeled and dimed into giving up everything, like Google does, right? Google knows more about you than you know about you, because it's been nickeling and diming your information 1,000 times a day, and now it knows everything about you, and more than you do.
Yeah. So basically, lots happening, digital identity project that could be very interesting. And also, even you can also have different kind of identities in the metaverse. That could be also
in the metaverse, you're completely free to do what you like, for the time being at least. And you might want to establish an identity. I mean, it's interesting. I hadn't really thought of it, but as they push to make you an identified and bound and gagged human in the real world, people will transition into the metaverse for liberty.
Exactly, for freedom as well, right? In the metaverse, I can be this part of myself that perhaps in the physical world is not so easy to express. So
Stefano the Barbarian, no doubt.
Well, I don't know. I think it will be interesting to see. Okay, so are you stuck in any crypto or no?
Stacking crypto? Well, yes and no. I'm loving DeFi still, and I'm stacking. I've got a lot of capital in crypto in stablecoins, and stablecoins give you the ability to stake them on various sites and earn really good interest rates, 6, 7, 8, 9, 12% interest rates with big, sensible, properly seasoned companies. And that is joyous, because you stick a lump of money in a bank and they laugh at you again. Oh, you have 0.1%, and I can stick the same dollars onto a BlockFi or whatever, and get very, very good yields, and that is something that I'm enjoying.
Okay.
Because as a miser, I can actually see my money going up in real time.
Okay, so are you farming as well, or doing some liquidity provision?
Yeah, all of the above.
Okay, right. Here is the question. Obviously, you're probably using lots of Ethereum to do this farming as a collateral. Maybe you are not, but maybe you are. If you are, everything that is happening with the delay in the migration to Ethereum 2, are you worried about that perhaps the price is going to get a big hit and maybe you're going to find yourself in trouble because you are holding Ethereum?
Well, Ethereum's quite an interesting, see, one way to do it, this is top secret now, don't tell anybody, okay, is that if you take your US stablecoin, you can put it in somewhere like Compound, and you can borrow Ethereum. Yeah. So you're borrowing it. It doesn't, as long as you have the same Ethereum, you can put it back. You're not actually, you don't care which way the direction goes. Yeah. So you can take, say, $10,000 of US stablecoin, borrow $5,000 of Ethereum, and then use that in a liquidity pool or stake it or whatever you want to do. As long as you've got the same amount of Ethereum when it comes out, you don't risk the price. Now, if you're clever or not clever, if you're risky, you can put your stablecoin in, borrow your Ethereum, sell it for more stablecoin, put that on deposit. And if Ethereum goes down, you've made a profit because you've gone short Ethereum. And then you take your USDC out and you buy your Ethereum cheaper and you pay it off and you've made money if it goes down. So that's a good way of shorting using DeFi if you want to go short. And I'm not a fan of shorting. But you can also do it the other way around. You can take your USDC in and you can borrow Ethereum, and when it goes up, sell it.
Yeah. Okay.
And then you've got more USDC. So lots of wangles like that.
But exactly. But exactly what you said is there are wangles and how people keep track. So I'm gonna borrow.
It's a skill game, Steffi. It's a skill game. It's like all these things. They're skill games, and you have to skill up. And then if you decide that you want to play it, you can play it. I mean, I was playing with Uniswap and V3 a couple of weeks ago, which enables you to put your liquidity into a trading pool with Uniswap. And it's terrifying because if the price goes against you, you end up with a load of what you don't want. And you know, it's a very, very much a difficult game for me to play because it's the risk is too high for the rewards, in my opinion. So I don't play it. So it all comes back down to risk and reward, unless of course you're just taking your money and putting it into platforms that pay you a return, and then your only risk is those platforms blow up or get robbed or go bust or run off.
Okay, so basically it's keep playing DeFi, skill up, and that's the best way.
Always skill up. That's the thing about crypto. That is the only thing you really need to know is you need to know everything, and you need to skill up. You need to buy all the books, read them all up. Don't believe a word of it. Just read. Take a bit of money, play around with it, and you know, it's a sport. It's a pastime. It's an activity. You can't blunder into it and expect to win or do very well. You can do it by scaling up, and that really is a matter of knowledge and practice.
Okay, so Clem, I think we have got your tips and secret on crypto trading. I think you know you share quite a few tricks here. Do you want to leave maybe the viewers with another tips, maybe stock and shares or anything else that you think?
I can only tell you what I've been buying.
Okay.
And you know, I bought some EDF yesterday, and EDF.
I thought EDFN.
No, EDF, which is the French electricity company. The bad news is that it's mainly owned by the French government, which can be, you know, relatively rash, and when it comes to what they do with their utilities. But basically, if you think about energy and energy security, Europe's got a major problem with that. And the other problem that they've got is that a lot of those countries don't want to build nuclear power stations, which is the logical thing to do in circumstances. And most of the countries don't have any room for more energy generation. Now, France does not have a problem with land. It's got, you know, basically 4 times more land per head than pretty much, you know, any of the other major countries. It doesn't have a problem with nuclear power. It's, you know, it's got loads of it. And, you know, it is basically a electricity and power hub for Europe. And EDF's cheap. All the other, if you look at the English generators, they're all going, way, you know, National Grid, way, SSE, way, and EDF is subdued. So, you know,
so some EDF Anglo-American, correct?
I bought Anglo-American this morning because, you know, as the value of money goes down, so the value of commodities in prices go up. So the price of these commodities will go up. They'll get hammered a little bit or maybe significantly from the costs, because obviously their costs will go up because inflation will go up, but the commodities will go up because you can't cheat commodities.
Exactly.
Or in the short term anyway, because you just can't switch that stuff on and off that fast.
Yeah.
I bought some ITV as well this morning because again, that's on its backside and it seems to be, you know, badly priced, just too cheap.
Okay. Fantastic. Clem, thank you so much for, you know, joining today and sharing all these valuable tips to us.
Well, let's hope so.
Thank you. Thank you, everyone. And I will see you next week.
Bye now.